take a look at the global financial crisis of 2008. Look at where we are today. With this next crash, you're going to see something more devastating than the crash of 2000, more devastating than the crash of 2008. This is going to be really big when it happens. Well, as the national debt rapidly approaches an incredible $35 trillion, a whole bunch of very nasty factors seem to be converging, and we're going to cover those in this video. But I just want to point out, when I was writing my first book, the national debt was approaching $9 trillion. Now we're about to top $35 trillion. Just amazing. So moving on, the Congressional Budget Office jacks up the 2024 budget gap forecast, so their estimate, by 27% to nearly $2 trillion. Now, one thing I want to point out is these guys are always wrong. They are always underestimating things and painting a rosier picture than actually exists. Otherwise, they wouldn't be jacking this up by 20. They were wrong by this amount earlier. So they're changing this, and they're saying that it's going to be nearly $2 trillion. Well, that means it's probably going to end up being like 2.3, 2.5, who knows? Meanwhile, U.S. budget disaster ahead will impoverish Americans. Deficit spending is not a growth tool. It's a recipe for stagnation. And it's also a recipe for wealth transfer. It steals from the average person and rewards the people up at the top. Moving on. Americans saved and spent their pandemic windfalls. So this is all the stimulus that went out and the increase in their checking accounts. This was cumulative excess savings. So this was in checking accounts mostly, not savings accounts. And I covered this in my book, and I finished writing it here in 2022, but the data from the Federal Reserve was still up here near the peak. They hadn't released the data, and they slowed down releasing the data since then. Now, this is from Bureau of Economic Analysis. And so the data, they're sort of hiding some of the data, delaying some of the release of some of these things. But this is what drove all of the inflation that we've been experiencing. Now, everybody is out of those excess dollars that they had saved up. It's no longer in their checking accounts. And they've been racking up their credit cards, and then the interest rates got jacked up by the Federal Reserve. So personal interest payments, so by consumers, have just like skyrocketed suddenly. So they're out of the excess cash, and they've got heavy payments. They're in debt. Now, I want to show you this. This guy posted this little video, and in 2022, he ordered 45 items, and he says in this video that was like a month's worth of groceries for him. So he ordered online 45 items in 2022, and it was $126. Then he noticed recently that there's a reorder button here. So he pressed reorder all, and what he found was the same order is now $414, from $126 to $414. Now I went to a percentage calculator, and from 126 to 414 is 228.6% inflation. And so going back to his thing, when I wrote my first book, I coined the term the CP lie. I came up with that when I wrote my first book, the CP lie, because I spent weeks on the Bureau of Labor Statistics, so the BLS, and I call that the BS because there's really no labor involved. So I spent weeks on their website looking at all the different ways that they calculate inflation and all of the different ways that they adjust it so that they can lie. And I came up with the term the CP lie. So do you still believe that government inflation CPI data is real? tell me in the comments, do you think it's really the CP lie? So moving on. This is trucking employment has been collapsing. Now, Alan Hibbard presented this a couple of videos ago, and he did some excellent analysis on it. But one thing that he didn't point out is that here we have the year-over-year change in truck transportation employment and private sector employment. And what you'll notice is that the trucking is a leading indicator. Why is this a leading indicator? Because as there are fewer goods and services shipped, trucking collapses first, then manufacturers have to, and retail stores and so on, have to lay people off. So there's less employment, but it's the private sector employment falls after trucking. Trucking falls first, and you can see that it fell, and then the private sector employment fell. There was a recession. Same thing here. It was a leading indicator. There was one false flag here with the trucking back in late 2016, it looks like. But even with the repo crisis that happened back in, or actually, no, this is the pandemic plunge. So this is the recession that was caused by the pandemic. But for some reason, the trucking sort of predicted that was coming. Very unusual. But look at where we are today. I really do think that we're actually in a recession, but the stock market has just gone crazy, and everybody thinks the stock market is the economy, and it should be the other way around. The stock market should be following the economy, not creating the economy. So notice that this is from June 13th. So this is almost a month ago that Alan covered this, and that we were so negative. But he forgot to mention that trucking leads, and it's definitely leading something right now. But then on June 24th, Texas Logistic Company with 500 truck drivers abruptly ceases operations. So the trucking is falling, and it's falling at a rapid pace. Now, this is interesting. We will put a link in there. But if you look at the number of restaurant closures that are happening around the country right now, the retail is already getting hit hard with what I believe is like a disguised recession. The government is fudging the numbers, and this is telling the truth. When restaurants close, there's a housing bubble. This is data for the South, but in the South, the housing bubble has just exceeded the August 2006. So the 2006 and 7 bubble that led to the global financial crisis of 2008, we've now exceeded that. Rent versus buy, so the renter's burden versus the homeowner's burden. And this is showing that we are in an extreme real estate bubble again. Delinquency rates of multifamily housing is near record highs once again, but I want to point out something here. This is the 2006-2007 real estate bubble, and then it crashed and brought on the global financial crisis of 2008 and 2009, and then the delinquencies started rising. Why are they rising now? This is a very ominous sign. So with more real estate here, the Dallas Fed Index, it's a home price index for G7 countries. And this guy is pointing out that in the 1990s, Japan's massive real estate bubble popped, and it still hasn't recovered. So this was their real estate bubble from their big stock market boom of 1989, and then it crashed in 1989. And the real estate peaked and crashed starting at the end of 91. And it still has not recovered in all that time. Now, one of the things I want to point out here, this guy is pointing out, this is Canada. But here's the US, and here is the 2006-7 real estate bubble and the 2008, 9, 10, 11 correction. And here we are, and here's Canada. I don't know which country this is, but these are all indexed together at some earlier time. I don't know where it's, but it's from the Federal Reserve Bank of Dallas. It's probably fairly accurate information. Now, this article, How Stocks Have Become the Game That Record Numbers of Americans Are Playing. And it is a game, and this is dangerous. It's a casino, and record numbers of Americans are getting into this right at the top. The 5 largest companies as a share of the S&P 500, it's in record territory. And then the Buffett indicator officially crossed the 195% line for the first time in history. Now, the Buffett indicator is something that I've tracked for years. And yes, we were at about 140%, 135, 140% in the year 2000. So this is the value of the stock market, all the publicly listed companies, because the Wilshire 5000 no longer has 5,000 companies in it. It's about 3,800, I believe. And that divided into GDP. So it's a ratio. And it was at 140% roughly of GDP, so 40% larger than the GDP. Well, now it's about double GDP. All the goods and services bought and sold in the United States for an entire year, and this is just the publicly listed companies. It's not all of the restaurants and dry cleaners and pharmacies and grocery stores and everything else that aren't publicly listed. So this is insane, but what's even more insane is everybody keeps on putting in a mean, that this mean is calculated by all of the data that they've got back going to 1970. Well, in my book, got the Great Gold and Silver Rush of the 21st Century, I absolutely proved that this mean is wrong, and anybody putting in there is doing a disservice to everybody looking at this. I proved that we have been in the bubble century, this entire century. We've been in this incredible bubble that, and this was just coming back down to like the peaks of where this bubble should be, where to fair value. Mean is way down here. And I proved this like 5 different ways with PE ratios, with the number of hours you have to work to buy one share of the S&P 500. But the best proof came from a couple of European economists that had produced a paper that somehow didn't make it onto everybody's radar. I had a researcher that had to dig really deep to find this one. But what he found was this paper called The Big Bang by Dmitry gotta look at my book here. It's Dmitry Kuvshinov and Kaspar Zimmerman, and they had done a study on 17 advanced economies all the way back to the year 1870. This only goes to 1970. It's got 100 more years of data than this does. And then they did an interquartile chart where they take all of the data sets and they eliminate the top 25% and the bottom 25% and just focus on the center 50%, because that eliminates hyperinflations, it eliminates stock market closures, it eliminates the effects of war and so on. And so it's a very conservative way of measuring this. And it's once again, so here it is. This is absolute proof that, and this is what the hours you have to work to buy one share of the S&P. It's what all of the charts, the PE ratios, the dividend yields, everything looks like this, where we are just in this bubble century where everything has gone totally insane. And so with this next crash, you're going to see something more devastating than the crash of 2000, more devastating than the crash of 2008. This is going to be really big when it happens. When is it going to happen? I don't know. I just know that it is going to happen, and the evidence is piling up that it's getting sooner. We may have a pretty bad last half of 2024 or 2025 coming up, and I believe it's time to get prepared. And so does Michael Burry. back to the Big Short investor Michael Burry just made a multi-million-dollar bet on gold, and he dumped tech giants such as Alphabet, which is Google, and Amazon. Stress among small banks is likely to slow the U.S. economy. Oh yeah, just to slow it? I don't think so. I think it's going to be a lot worse than that. Zombies. The ranks of the world's most debt-hobbled companies are soaring, and not all will survive. PIMCO warns of more regional bank failures on property pain. Moving on, the music just stopped. Japan banking giant liquidate $63 billion in treasuries and European bonds. This is a massive amount that they're going to be liquidating, and that puts pressure on the entire banking sector globally and U.S. Treasury bonds in general. And down further in the article, they have an updated version of the chart that I showed you when Silicon Valley Bank melted down last year. When that banking crisis happened, I went to the FDIC's website and I found this chart and I showed it to everybody. And this is the maturities held to security the banks don't have to disclose. They can keep them on their balance sheet at full face value. Available for sale is stuff that they have to mark to market. So it was like they were hiding all of this, and this exposes it. Now, take a look at the global financial crisis of 2008. Look at where we are today. We're in a very dangerous spot. This is Kyle Bass saying that China's banking system is collapsing. Now, maybe or maybe not. This is just one video report that we've got here. But China has 340% of its GDP in banking system assets. The U.S. has 1 times GDP. Over 1/3 of said assets are lent out to Chinese and Hong Kong real estate sector, experiencing its own crisis down 30 to 50%. So the entire banking system in China is insolvent. And this is true, but actually, when a bank makes its first loan, it's actually insolvent. You just have to study how banking works. Meanwhile, something is up at the Fed. Could they be getting ready for something? There is, so we've got the China banking sector melting down. We've got the Federal Reserve boarded up. This is just speculation, but could this be to keep people from trying to actually burn the place down or something like that? I have no idea. I don't want to start any rumors. It's just odd that the Federal Reserve, it's not like they're doing some remodel or something like that. This thing stretches the full length. They're not just doing something here or there. It's very, very suspicious. So the Great Monetary Pivot of 2024 by Nick Giambruno. I really think that you should read this one. It's very, very interesting. And down toward the close, he talks about QE, inflation, and so on. And he says, let's put the pieces together to see the big picture. One of the steepest rate hike cycles in history, and it actually is the steepest, not one of, but it is the steepest in history, couldn't stop inflation. The Fed can't raise rates much further without bankrupting the U.S. government because of the soaring interest expenses on the skyrocketing federal debt. And you saw the opening with the $35 trillion. It is insane. And the $2 trillion deficit. QE is likely to return and be bigger than ever. And I wrote that when I did my 2015 update of my first book, Guide to Investing in Gold and Silver, that with each consecutive QE, it's a percentage of the currency supply. So it has to grow at these enormous percentages. So yes. And then later he says that here's the bottom line. This could be the latest rate hike cycle before QE to infinity, which would presage the dollar's collapse, or as Ludwig von Mises, the godfather of free market Austrian economics, put it, the final and total catastrophe of the currency system involved. Unfortunately, most people have no idea how bad things can get when a currency collapses, let alone how to prepare. We will likely see incredible volatility in the financial markets that could decimate many ordinary people's life savings and retirement assets. And as you saw earlier, the most number of Americans are now like gambling in the stock market at this time when it's incredibly overvalued. And then I've made those videos on the great taking, because if this happens, the great taking will happen. But I'm not just talking about the run-of-the-mill stock market crash or currency crisis. It's something much bigger with the potential to alter the fabric of society forever. It's created an economic situation unlike any we've ever seen before, and it's all building up to a severe crisis on multiple fronts. It could all go down soon, and it won't be pretty. And, I believe that you have to sort of prepare for both a bright future but first you need the insurance. That comes first. You need the insurance in case we have this playing out, and it really does look like all these things are adding up together to where this should play out soon. And then this is going to be far worse than the Great Depression. Now, Bill Holter does tend to be a little bit more toward the negative side, as am I a lot of times. But when I see all of this, I can only come to one conclusion. It's out there in the future for us. I just don't know when. He talks about the FDIC with the amount of insurance that is there is almost nothing. And they instituted a great taking back with the Cyprus banking crisis back, I think that was 2013, where they did bail-ins. And so instead of the taxpayers footing the bill, it was the depositors that footed the bill. And then hundreds of thousands of Americans are going off-grid in anticipation of what's coming. Now, I am also off-grid, but it's for different reasons. But I've got one thing to say, one question for you. Have you got gold and silver? I'm sorry for that, but I want to thank you for watching. We'll see you next time.